Shoppers abandoned Big Lots, and the reason is shocking. In September 2024, Big Lots filed for Chapter 11 bankruptcy. A discount retail chain with 1,400 stores just collapsed, and the mainstream media completely missed the real story. Because this wasn't about inflation. It wasn't about consumer spending. This was about a broken business model that finally cracked. Let me show you exactly what happened.
Big Lots had a massive identity problem. They weren't cheap enough to compete with Dollar General. They weren't curated enough to compete with TJ Maxx. They weren't convenient enough to beat Walmart. They were stuck in no man's land. Their original model was simple: buy liquidated inventory and sell it cheap. Closeout merchandise, overstock items, seasonal leftovers. That was their entire value proposition for decades. But here's what nobody talks about. That model died in 2020. During the pandemic, everyone overstocked. Target had excess inventory. Walmart had excess inventory. Home Depot, Lowe's, Macy's, everyone overordered. Big Lots thought they'd get massive deals on liquidation. They thought 2021 and 2022 would be a golden era for closeouts. Instead, something completely unexpected happened. Retailers started selling directly to consumers at steep discounts. Target launched clearance sales online. Walmart slashed prices in-store and on their app. Amazon offered lightning deals on overstock. The middleman got cut out. Big Lots lost their supply advantage overnight, and they never recovered. Their closeout deals disappeared. Their exclusive access to liquidation inventory vanished. By 2023, they were buying the same products everyone else sold, at the same wholesale prices, with zero competitive advantage. Now here's where it gets interesting. Big Lots raised prices while calling themselves a discount store. In 2022 and 2023, their prices went up 15 to 20%. Let me say that again. A discount retailer raised prices by almost 20%. Customers walked in expecting bargains. They found furniture at Target prices. They found home goods at Walmart prices, kitchen items at Amazon prices, but without the selection or convenience. The value proposition completely disappeared. And this is critical. Their core customer was price sensitive. These weren't luxury shoppers looking for an experience. These were budget-conscious families stretching every dollar. And they had options. $3 stores within 2 miles of every Big Lots, a Walmart within 5 miles, Amazon Prime delivering to their door. When Big Lots raised prices, customers didn't think twice. They didn't complain on social media. They didn't write angry reviews. They just stopped coming. Same-store sales dropped 11 quarters in a row. That's almost 3 years of consecutive decline. Think about what that means. For 33 consecutive months, fewer people walked into Big Lots, and the people who did walk in spent less money. Traffic was down, basket size was down, loyalty was gone. By mid-2024, some stores were seeing 40% fewer customers than 2021. That's not a rough patch, that's a death spiral. But here's the part that Wall Street missed. Big Lots was actually fighting 2 wars at once. War 1, discount retailers eating their lunch on everyday items. War 2, e-commerce destroying their furniture business. Let me explain why this matters. Furniture was 35% of Big Lots' revenue. More than a third of everything they sold was furniture and home decor. Sofas, mattresses, dining sets, bedroom furniture, big-ticket items with high margins. This was supposed to be their profit engine. But Wayfair, Amazon, and Overstock sold the same stuff cheaper, with free shipping, with better reviews and ratings, with easier returns and customer service, with visualization tools to see furniture in your room. Big Lots had massive stores with high overhead, 50,000 square feet of retail space, expensive leases in strip malls and shopping centers, utility bills, employee costs, maintenance. They were paying rent on enormous buildings to compete with websites. It was financial suicide. Their furniture sales collapsed 23% year over year. In 2023 alone, they lost over $800 million in furniture revenue. That's almost $1 billion in sales just gone. And here's what made it worse. Furniture was their differentiation strategy. This was supposed to be what set them apart from Dollar General, from Family Dollar, from dollar stores that sold cheap stuff.
Big Lots positioned themselves as the place for affordable furniture, but when that category died, they had nothing left. They became just another discount store, except they weren't discounted anymore. And that's when the debt spiral started.
Big Lots was carrying $570 million in long-term debt. They were burning through cash to keep stores open, to pay employees, to stock inventory, to maintain leases on 1,400 locations. In Q2 2024 alone, they lost $205 million. One quarter, negative $205 million. Their cash reserves were evaporating. Banks started pulling credit lines. Lenders saw the same store sales data everyone else saw. They knew Big Lots couldn't service the debt. Suppliers demanded cash on delivery. No more net 30 terms, no more net 60 payment plans. Pay up front or don't get the merchandise. The company was suffocating. Every day they stayed open, they lost more money. Every store they operated drained more cash. And here's the insane part. Management kept opening new stores in 2023 while same-store sales were tanking, while debt was piling up, while competitors were circling. They opened 40 new locations, brand new leases, brand new build-outs, millions in capital expenditure on stores that would never be profitable. They were doubling down on a losing strategy. This is textbook corporate denial. The CEO kept saying the turnaround was coming. The CFO kept projecting positive cash flow. The board kept approving expansion plans. Meanwhile, the company was bleeding out. By August 2024, they had no choice: file bankruptcy or shut down completely. They chose Chapter 11.
So, what happens next? Big Lots will likely close 300 to 500 stores, the weakest locations, the unprofitable markets, places where they're competing directly with $3 stores. The brand will get smaller, not bigger. They'll shrink to maybe 900 locations, focus on core markets where they still have some loyalty. Some locations will be bought by dollar store chains. Dollar General will scoop up prime real estate. Five Below might grab suburban locations. Others will become fulfillment centers for Amazon, or Spirit Halloween seasonal pop-ups. Or they'll just sit empty for years, adding to America's growing retail graveyard. But here's what's really important. Big Lots is the canary in the coal mine. This is what happens when mid-tier retail refuses to adapt. When you're not the cheapest option, not the most convenient, not the best quality, not the best experience, you're just stuck in the middle. And in 2024, stuck means dead. We're going to see this exact pattern repeat at Party City, at Tuesday Morning, at Christmas tree shops, at every retailer that's neither cheap enough nor good enough. The middle market is getting wiped out, squeezed from below by dollar stores, squeezed from above by Target and Amazon, and it's not coming back. The next 5 years will kill dozens of these brands because the American consumer has made a choice. Either give me the absolute lowest price or give me the absolute best experience. Nothing in between matters anymore. Big Lots went from $6 billion in revenue to bankruptcy in 4 years. Not because of bad luck, not because of the economy, because they refused to pick a lane. In retail, you're either the cheapest or the best. Big Lots tried to be neither, and they paid the ultimate price. 14,000 employees losing jobs, hundreds of communities losing a local store, billions in shareholder value evaporated, all because management couldn't see what was right in front of them. If you want to understand retail, watch what happens next. Watch which stores survive the next recession. Watch which brands actually adapt to e-commerce. Watch which companies choose a clear strategy, because this is just the beginning. The retail apocalypse never ended. It just paused, and now it's back.